And maybe we can go straight to the presentation.
Sure. Good day, ladies and gentlemen. On behalf of EIH Limited and SKP Securities, it's my pleasure to welcome you to EIH Limited's Q3FY23 earnings webinar. We have with us Mr. Vikram Oberoi, MD and CEO, and Mr. Kalal Kundu, CFO. All participant lines have been muted. This meeting is being recorded for compliance reasons, and during the course of the discussion, there may be certain forward-looking statements, which must be viewed in conjunction with the risk that the company faces. We'll have the opening remarks and a presentation by the management, followed by a Q&A session. Thank you, and over to you, Mr. Oberoi.
Good afternoon, everyone, and welcome. I'll just quickly cap on touch a few important points. As a company, starting with our founder, we've always focused on our guests, and our guests continue to be our primary focus. We measure guest satisfaction using Net Promoter Score, and fortunately, we continue to deliver high levels of personalized care and attention, for which I would like to thank our colleagues. As a result of the loyalty we have from our guests in all our locations, or virtually all our locations, we are well above on RGI, we exceed market share. And since pre-pandemic levels, that has grown further. And Kalal will talk a little bit about that and margins, etc., in the presentation that he'll make. In most locations also, at least as far as Oberoi Hotels is concerned, we're SDR1. So not only have we increased our market share over our comp set, but we also ranked 1 on SDR. With that, I think or maybe last thing I'll say is Q3 has been a very good quarter for the industry and equally for us. And Kalal will cover that in his presentation as well. So I will pass it on to Kalal to make the presentation, and then we'll be happy to answer any questions that you have. Thank you.
Thank you, Vikram, and good afternoon to all of you. It's a pleasure to be back. I hope my screen is visible.
Yes, Kalal. Kalal? Kalal, you're on mute.
I was the market leader in November 22 and December 22, 80%. We have some good news to share here. With respect to the hospitality industry, EIH has performed really well. We've measured this through 2 parameters. One is the relative RevPAR growth of EIH as compared to industry. So as you can see here, the industry grew by between 3 to 4% versus pre-pandemic levels in October, 1 to 3% against pre-pandemic levels in November, and 12 to 14% in December. Vis-a-vis these numbers, EIH domestic hotels have grown by, the RevPAR of EIH domestic hotels have grown by 19% in October pre-pandemic versus pre-pandemic, 17% versus November, and 34% in December versus the pre-pandemic levels. The other interesting thing to note here is if we were to consider the top 5 hospitality companies in India by market cap, which as on 31st December totaled to about 75,000 crores, the median PAT margin after exceptional items, and this is for consolidated accounts, was 20.8%. The average in Q3 was 15.9%, and EIH is the highest at 24.9% in this comp set of 5 companies that I just mentioned in terms of market capitalization. The same trend is visible in the 9 months, where the median is 13.1, the average is 12.2, and EIH is 17.2%. Again, this is a PAT margin excluding exceptional items, and this is for consolidated accounts. The reason why we believe our positioning in terms of our RevPAR growth as well as our profitability is high is clear in this slide, where you would notice that we are a ARR focused company or a price focused company and a quality focused company, and therefore we make sure that our average room rates are relatively higher than industry, which is visible from the continually high ARI, the ARR index, right from April 2019 to December 2022. So this is essentially the orange line. The market penetration index, which is a ratio of the occupancy of EIH domestic hotels or the Oberoi domestic hotels versus the competition, may be lower, but that doesn't really matter to us, because as a result of the high ARR, we continue to have a high RGI, which is consistently above 100, except the single month of June 2020, since the period April 19 and up to December 2022. This clearly shows our focus on rates is yielding, and this is actually making us the most profitable company. As we move on, just to remind everybody that we were voted as the best hotel brand in the world at the Travel and Leisure World's Best Award 2022, and even the previous one we were voted the best. So in terms of quality, in terms of readers' preferences, also we continue to be number one. From a balance sheet perspective, I think we have a strong foundation. As you can see, and this foundation is only strengthened over the quarters. Going from December 19 up to December 22, our balance sheet strength has continued to evolve and improve, with our debt equity ratio now, as on 31st December, is as low as 0.05, with our net debt only at 60 crores. So we are well poised for all growth initiatives that we are going to take, which will ensure that we have adequate internal funds, as well as we have a sufficiently good capacity to borrow if need be. The current ratio is also healthy at 1, which will give a lot of comfort to our creditors as well. The weighted average cost of debt as on 31st December 22 was 7.8%. If you see in terms of financial agility, EBITDA margin has improved from Q3 of FY20 to Q3 of FY22 by 4 percentage points, from 33% to 37%. Payroll as a percentage of revenue has come down from 26% to 22% in the same period. And the total expenditure as a percentage of revenue has also come down from 67% to 63% using the same periods. Financial agility is also demonstrated in this chart, where you can see the consumption of provisions, wines and others has gone up by only 2%. Power and fuel has increased only by 3%. Repairs and maintenance has increased by 26%, but that is primarily because as a company, we believe that it's important for us to ensure that our upkeep of hotels is absolutely in pristine condition. Administrative expenses have also grown by 17%. Payroll and related expenses have grown by only 1% this quarter. So overall, the total expenditure has grown by 10% when compared to Q3 of FY20, whereas the revenue has grown by 17%. So definitely, I think the operational efficiencies that we achieved during COVID is kicking in. Q3 performance, as Vikram highlighted, has been stellar. So if we were to consider the EIH owned hotels, as well as the EIH domestic hotels, the Q3 RevPAR is at the highest at 13,332 for EIH hotels, and at 12,805 for all hotels, all domestic hotels taken together. And the two asterisks would show the comparison between Q3 of the normal year, which was FY20, versus the current quarter. So from 10,473 to 13,332, a RevPAR increase of almost 30%. The same is reflected when we break it down into monthly occupancy and ARR. When we look at it month-wise, so from October, November to December, November obviously has been an excellent month, was an excellent month, but December has been even better. So going up from 67% in October to 79%, sorry, this is, 79% and going up to 83% in FY23, October, November, and December. The same scenarios in case of the monthly ARR, where the average room rate has gone up from 15,167 to 16,568 to 18,107. And effectively, this is the quarterly occupancy and ARR, which is shown in the slide on the right. If you were to look at it city-wise, the highest growth in our case has come in when we compare it vis-a-vis FY20, and all our comparisons are with the normal year because we believe that it's important to note how we are performing versus what it was normal before COVID. So Shimla and Chandigarh has registered a 60% growth in RevPAR, followed by Bengaluru at 35%, followed by Udaipur, Jaipur, Mumbai, and Delhi. Hyderabad and Bhubaneswar has been slightly lower at 18% and 15%. Kolkata is 3%, and Agra, unfortunately, there's a RevPAR degrowth of about 7%. If you were to divide the performance that we just saw in terms of the various categories of hotels that we have, so in Oberoi Metro, Oberoi Leisure, Trident Metro, Trident Leisure, Trident City, and others. So the highest the best performing segments have been the Trident Metro and the Oberoi Metro properties, which is something really positive for all of us. Oberoi Leisure is also good, but it's really heartening for us to see that the metro cities have been performing because a large part of our inventory is in the metro cities. The average rates are here. I would leave it to you all to see this chart in detail when you do your analysis. There are strong tailwinds in almost all segments, with the highest tailwinds coming in terms of direct business, followed by corporate. But in December, as we see, or in the Q3 of FY23, as we see, even leisure and MICE has caught up. Now, trend of foreign room nights, this is the question normally, generally people have as to what part of foreign room nights have come back. So the bold lines are the ones which relate to the months in the current financial year. And the dotted lines are the ones which relate to FY20 of the corresponding months. So if you were to look at all our hotels in the month of December, for instance, while 60% of the room nights were foreign room nights in December in FY20, it's 44% as of now in case if we take the Oberoi hotels. If we take all the hotels, it was 54%, now it's 37%. And if we take only Trident hotels, it was earlier at 50%, and now it's at 32%. This really gives us a lot of reason of encouragement, because with foreign travel going up, we can expect the performance to be even better. Looking at food and beverage revenue, very positive news again. While our hotel F&B revenues have grown by about 18% as compared to Q3 of FY20, the one positive news that we have for our flight catering and airport lounges is the revenue in this segment has grown by 57% when compared to Q3 of FY20. We continue with our carbon footprint initiatives, and we will come up with more in the quarters to come as we progress. But this is just a snapshot. Wherever we've implemented our solar plants, our average cost of electricity has come down from 10.9 rupees per unit to 5.9 rupees per unit. And there too, it's not as if it's 100% solar. So this shows that there is indeed a long way to go for all companies in India. The hotels which consume renewable energy is listed out here: Oberoi Gurgaon, Trident Gurgaon, Oberoi Bangalore, Trident Chennai, and so on and so forth. The performance highlights you would have already seen as our results were declared. We ended the Q3 standalone with a PAT of 104 crores, including exceptional item of 21 crores. And here I must state that the management has been really aggressive in terms of making sure that we are conservative in our accounting and we continue to strengthen our balance sheet. But despite that, our PAT has grown from FY22 to Q3 of 32.6 crores to 103.9 crores. As we see quarter on quarter, revenue has grown, again, standalone results from 449 crores in FY20 to 525 crores in FY23, Q3. EBITDA has increased from 146 crores in Q3 of FY20 to 193 crores. PBT before exceptional items has gone up from 99 crores in FY20 to 157 crores. PAT has gone up from 75 to 104, and total comprehensive income from 73 to 111. Consolidated results also reflect what we saw in standalone. Revenues up from 534 to 603. EBITDA up from 178 to 226. PBT up from 136 to 187 before exceptional items. PAT up from 103 to 149. And TCI up from 100 to 157. On expansion plans, we already had a mention of this in the previous quarter. And as we go along in further quarters, there will be many more announcements to come. But as we speak, we had promised the Bay Club opening, which has opened in November 2022 in Mumbai. There's a restaurant that is it's nearing completion and will be open in Mumbai. It's a standalone restaurant in March 23. The hotels which are scheduled to open in FY25 are Rajgarh and Bandhavgarh with 48 and 24 keys respectively, and Bardia in Nepal with it's a managed hotel with about 18 keys. The Oberoi Rajgarh is of course owned. In FY26, there's a hotel in Kathmandu, Wadi Safar, Saudi Arabia, and Trident Tirupati has been signed up. The lease has been signed up by our subsidiary, our 60% subsidiary, which is Mumtaz Hotels, which will be managed by EIH Limited. In FY27, hotels in Goa and a second property in Alzora. But of course, under active discussions, there are 3 Oberoi hotels, 7 Trident hotels, and 1 service apartments. And we will articulate these more as we go forward. Just for everybody's information, the business footprint, this is more from an information point of view, so I won't dwell into this much. And as a snapshot, we have 24 hotels and resorts in India with 3,750 keys as on date, and 497 keys across the globe. With that, thank you from my side, and we look forward to any questions that you all may have.
Thank you, Kalal. That was quite exhaustive. We'll just wait for a couple of minutes and we can start our Q&A session thereafter. Anyone who wishes to ask a question may please raise their hands. We'll unmute you and take your question. The first question is from Tarang Agrawal. Tarang, please go ahead.
Hi, good afternoon and congratulations for a stellar performance and a rather elaborate presentation. Just a couple of questions on the trends and how you all are seeing it. First,
and occupancy currently at the we're doing currently the Oberoi Bangalore, where the hotel is running well into the 90% occupancies.
Okay. Now the second question is, I noticed that the foreign travel is not back yet, and a large part of your occupancy is actually being driven by domestic tourism. I mean, just wanted to, gather a sense on what is the longevity of this, because there is a reasonable amount of latent demand that might have perhaps shown up in this quarter. So perhaps assuming if foreign travel doesn't come back soon, how are you seeing this? How are you seeing it in your current quarters? And maybe if you could give us some sense on how do you see this trend that we've seen in Q3?
Well, everything that we see, and we look at our data regularly, both business on books, we project future occupancies by hotel, and all those trends continue to be very, very strong. I think that'll be augmented with foreign travel, which is going up and hopefully will continue to go up. So I think across all segments, if I were to just summarize, we're seeing strong growth. In our forecast, that is continuing, and we have no reason to believe that that will not continue into the future.
All right, just a couple of more. In terms of all the plans of opening new hotels, whether through management contracts or your owned properties, a ballpark capex estimate from here on would be helpful for, say, FY23 and FY24. That's one. And second, I think you've done a tremendous job in terms of pruning your employee expenses. But when I see it on a relative basis to other players operating in the industry, I mean, even today, EIH is significantly higher than players, and that would perhaps, I mean, that's how the business model is. But what I wanted to understand, is there a scope to prune further, or
companies and across hotels. And our commitment is to address that fully. And I think what would be interesting to know is what attrition levels are at hotel companies. The higher the attrition, the lower the productivity. So in the short term, we have made a commitment to reducing the number of work hours that people work, looking at work-life balance, which continues to come year after year on our Aon surveys, or our concentric surveys. We're committed, number one, to addressing that. Number two is with attrition. Hopefully that will bring down attrition substantially and increase productivity substantially. So I think in the long run, we will see greater efficiencies. And we certainly are committed to doing that.
thanks. And the number on capital outlay for the next 2 years?
I don't have that with me. I don't know if Kalol has that readily available, but we can certainly include that going forward.
I think, Tarang, I would rather refrain from discussing CapEx at this stage, because we're just beginning we are just completing our budgeting exercise as we go along. So the regular CapEx that we will have in hotels will be similar to what we used to have in pre-pandemic levels, about 40 to 50 crore. But for the projects that we have listed out, there's only one project at the moment, which is owned project where we are spending money. And that shouldn't be anything substantial. As you can see that our debt levels are 60 crores only as on 31st December. And I would urge you to look at that number again in 31st March. So therefore, it's not really too much of a concern for us. But having said that, we will be in a clearer position to tell you maybe in the last quarter when we have already completed our budgeting exercise.
And I just wanted to add one further thing that, you know, for us, our focus on growing the number of hotels we have is our biggest priority. And we work, not a day goes by when we don't work on this. So I'm confident that that will yield results in time to come.
Thanks a lot.
The next question is from Saket Kapoor. Saket, please go ahead.
Namaskar, sir, and thank you for this opportunity. Sir, firstly, just as you concluded to the earlier participant that, sir, I'm audible to you?
Yes,
yes, sir, absolutely.
Yeah, yes, sir. Sir, as you have just answered the earlier participant that you are always in the foray to increase your count of hotels. So, sir, this being a hugely capital-intensive sector, and also the refurbishment and the remodeling, if I may use, for hotels and other restaurants and all, requires a continuous process. So, how good is capital allocation in the segment, that gives you this understanding that it is always correct to increase your hotel count, sir.
Saket, thank you. Actually, there's one hotel project which also Kalol mentioned, which is an EIH project, but the other ones are through management contracts. We're also looking at partnerships, and hopefully in due course we'll be able to talk about that as well. But growth doesn't always require the hotel company, in this case EIH, to invest in the asset. Growth can take place in other ways. And probably for our industry, management contracts are the model that many hotel companies follow. And we are no exception to that. So this continues to be, or is a focus. And I hope in time to come, we will be able to share further details with you, in addition to the details that Kalol has already shared today.
Sir, a small point again, sir, how has this industry shaped up post this pandemic part? And as people have spoken about the latent demand, inner demand, sir, we have seen that in all the cases, although it is not about likewise comparison, but wherever there these aspects of inherent demand or inner demand everything has plateaued out over a period of time. So how different can you compare a hotel industry with other business aspects wherein they have returned to the mean revision has happened, and herein we are speaking of you are seeing more signs of green shoots rather than any slackening of demand. So what gives you this understanding that for a hotel industry, which is a discretionary product, these kind of numbers would continue even in other aspects where we are seeing recession?
No,
not
sure.
recession exactly, but things are tapering down, sir. That is what my understanding is.
Thanks, Saket. So we can only go by what we see, and what we see based on even future reservations is demand continues to be strong. But there are two things that drive our results. One is a growth or demand, but also equally we would like to increase and have been increasing our market share across hotels by location vis-a-vis our competitive set. And our efforts will continue to get a larger share of that pie, whether it is bigger or smaller. But like I said, everything that we look at today suggests the demand will continue to be strong based on information we have today. And in fact, we have no reason to believe that foreign occupancy will not come back. And when it does, the benefit to EIH will be substantial because, like Kalol shared in that slide on foreign occupancies, we appear to be, at least based on historic data, a natural choice for foreign travelers coming into India, whether that's on business or on leisure.
And if I may also add, Vikram, I think what needs to be also seen, Saket, since you're mentioning or you're talking about potential, if you see in general in India, what is the average room rate that a traveler pays versus what is the rate that a traveler pays in other countries, including not only in Western countries, but also in other developing economies. So if you see the differential there, then you will know what is the potential that is there for India. We just hope that the industry as a whole plays to that, as we do definitely believe ourselves, and in which case the sky is the limit.
Two small points, sir. So then what are the key...
Saket, may I request you
to
join
I'll come in the
the
queue, sir. No issue. Yeah, I'll come in the queue, sir.
Thank you.
Thanks, Saket. Thank you.
The next question is from Nihal Jha. Nihal, please go ahead. Nihal, please unmute yourself and go ahead, please. Okay, I guess there's some...
Am I audible?
Yes, Nihal, please go ahead.
My apologies for that. Congratulations on the strong performance. I had two questions, Mr. Oberoi and Mr. Kundu. First was, if I look at your month-wise performance that you've given in the presentation, October, we are aware, had the impact of Diwali, but November, in terms of occupancy, was similar to what it was pre-COVID. However, the December month has seen a significant improvement in the occupancy for this quarter versus pre-COVID. So what has changed specifically that has led to such a strong spurt in occupancy for December? Maybe I'll take my next question up after this one, if you're fine.
Okay. Yeah, I see that. Nihal, I cannot answer that question as I sit here, and I don't want to say anything which is not factually correct, but we can certainly take this offline, and happy to look at each market segment, each hotel, and come back to you. But I would encourage you not only to look at occupancies, but please also look at ARRs and RevPAR.
Absolutely. Even on the rate side, I think I see that spurt, but maybe I'll connect offline if you want to have this discussion.
Happy to do that.
The second question was on the foreign tourist data that you share. Appreciate you giving the disclosure. Just as an observation, that as a number has stayed constant for the last few months, while it has seen a strong improvement from the month of April. So any specific reason or reading, and given you have the visibility on business on books, are you expecting that number to significantly improve in the Jan to March quarter?
So one market, which is so let me actually take one step back. The US market and the UK market are the two most important markets for us in terms of foreign travel. In the US market, we've seen a full recovery, in fact, over a full recovery. The UK, unfortunately, we have not seen that. We believe that may be to a large extent influenced by all the visa-related issues. You couldn't get e-visas. That has now been resolved. So we hope that we'll see a recovery. And this is despite the issues that sadly the UK faces with its economy. But time will tell, but we believe the UK will recover because it was just very, very difficult to travel from the UK to India. And those are our two most important foreign markets.
Got it. Could I take up one more question, or I can come back in the queue?
Please go ahead.
Thank you so much. Just on the mix of business that you've given, corporate seems to be slightly lower versus pre-COVID, but we've seen an improvement in the direct booking. Have you seen a trend where the increase or there has been a shift in terms of how people are booking? Maybe the corporates are going via the direct route, or still corporate travel is to see full recovery?
I think there's probably some overlap between direct and corporate. So I would say what you're saying is correct. To the extent that is I'm not entirely sure. But corporate is an important segment. We have good relationships with our corporate clients. We have an active engagement with them. And again, our endeavor will be to, at the right price, get a larger share of this business. May I just add one other thing which is important, is that RFP accounts typically book on base rate. And as occupancies pick up and corporate lead time is short, sometimes you have availability constraints. So please also keep that in mind, that this is materialized room nights, but hotels are running very high occupancies during the week and sometimes on weekends as well, depending on the location. And therefore, corporate demand may be suppressed because of a lack of availability.
Got that. Thank you so much, Mr. Oberoi. I wish you all the
Oh,
best.
my pleasure. Thank you so much.
Thanks, Nihal. The next question is from Vikas Ahuja. Vikas, please go ahead.
Hi, this is Vikas from Analysts.
Hello.
So firstly, congratulations on getting voted as the best hotel brand again. And my first question is related to this only. We are probably one of the best hotel brands in India. And the best, why don't we have a strong strategy on getting rooms added aggressively through management? Because when I look at your competitors, they are being very aggressive and even getting more aggressive and adding more and more rooms through this management. My first question, and I have a follow-up also.
Okay, so to answer your first question, Vikas, number one, you're correct. And number two, we are pursuing this very, very actively, like I said. That should bear fruit in time to come, and we will be able to share that with you in time to come. But this is a very important area for all of us, and we're working very hard towards that.
Yeah, I mean, just one suggestion, if there is any strategy which can be laid out to investors, so it would be very, easy for us for the modeling purpose. Secondly, rates, I assume this quarter will be all-time high or maybe highest since GFC. So my question is regarding the pricing, how sustainable it is. Do you think the supply will catch up fast in maybe next 2-3 years to check on the rise in the rates? Also in October, November, December, we have seen rates rising from 15,000 to 16 to 18. Do we think the 16K kind of average is sustainable in Q4, especially because the managers were pretty strong, which can offset some slowdown which is related to corporate bookings?
So I had trouble hearing everything you were saying, Vikas, but I heard most of it. And if I were to just summarize, you're saying, will these increase in rates be sustainable in Q4 and possibly beyond that as well? I believe they will be sustainable as far as we're concerned. And if you look at STO, and we look at that data every day, we are well above market on our ARR vis-a-vis our comp set. That differential, although I can't say with absolute certainty, I don't have the numbers in front of me, is growing even bigger. And certainly what I can say with confidence is between pre-COVID and now, it absolutely has grown. So we continue to focus on rates. We believe we have a differentiated product that guests are willing to pay a premium for. And they're willing to pay a premium for the service, the care, the personalized attention, and generally the upkeep of our hotels. And that allows us to demand or achieve a higher average room rate. And all those aspects of service, a differentiated product, is something we continue to focus on. The last thing we want to do is compete on price, because then there's no end to it. It's really a commoditized product. And if you're a commoditized product, your margins over a period of time get squeezed. That is not the area we want to play in. We believe we give our guests a great experience. And based on that, they, number one, appreciate that, value that, and are willing to pay a premium for that.
And one thing I missed, it's regarding the supply catching up to maybe next 2-3 years. I mean, historically, we have seen higher prices lead to supply also coming up in next maybe you can take 2 years or 3 years as a horizon. Are we seeing that trend also coming up? And I also have a follow-up, but I'll go back to the queue and maybe have other participants ask.
So I'm sure, I mean, the hotel industry hasn't seen much increase in supply recently. There was a big spurt after the boom in 2006. Hotels are long lead times for development, but I'm hoping that actually prices remain high, not only for us, but for others. And that leads to further development of hotels. The more quality hotels they are, the better it is for the industry. And both will also stimulate demand. So, sorry. So I believe that's a good thing.
Thank you.
Thanks, Vikas. The next question is from Sumant Kumar. Sumant, please go ahead. Sumant, can you hear us? I guess there's some issue. Let's take the next question from Rajiv Bharti. Rajiv, go ahead.
Hello.
Yeah, Rajiv.
Yeah. So my first question is on note 8 in your result sheet, which talks about some property tax levy. Can you clarify what exactly is this? Is there an incremental number also coming through after this quarter?
No, that will be the final number. This was property tax related to Bombay. And I'll maybe request Kalol to explain this in detail with numbers if we have that with us, so we can give you further information on that. But this was a one-time, there was a legal case. This went to the Supreme Court. And as a result of that, hotels and others saw a substantial rise in property tax. Kalol, do you want to explain that further?
Yes, Rajiv. So this pertains not only to us, but to every other hotel and many other non-hotels as well in Mumbai. As you would probably know that in 2010, the rates was, the methodology of calculation of property tax was sought to be changed, which was challenged by a very large range of affected parties. And this is not something that we've not disclosed before. This has been there in our contingent liability. We have been depositing 50% of the increased amount that was asked from us post the High Court decision and as per the High Court decision. And now that the Supreme Court decision has come, this was not pertaining, the case did not, it was not pertaining to us, but since the decision came out in general, we took a prudent stand to account for it, and therefore you see those exceptional items there.
And so, if you can quantify, what is the total quantum so far in a sense over the years?
It's 19 crore is the additional amount, which is, I don't know if it's clear from the exceptional, the notes to exceptional accounts, but yeah, it's 19 crores.
So 19 is for FY23, but what is the?
No. This is the accumulated one. This is not FY23.
Okay.
The exceptional items is only for the years.
Retrospect.
Sure. And secondly, in terms of your subsidiary performance, so if I simply do C minus S, there is a degrowth in the subsidiaries. So which particular subsidiary is basically causing this on a 3-year basis?
You're looking at degrowth and on which parameter, Rajiv?
If I do, I mean, actually it's degrowth across parameters in terms of, let's say, if I do consolidated sales minus standalone and compare it against Q3FY20.
Yeah. So, well, I'll start with the PAT first. The PAT would be on account of Mashobra, where you would recall that in the last quarter there were exceptional items in terms of the judgment that we had received. But in terms of revenue, our subsidiaries, generally Mumtaz and Mashobra, have done well. It is international, which is just picking up because hotels, as they've started opening up during the course of the year, as with other chains as well. It is international, which is really which needs really to perform as good as India is.
Safe to assume, is it bulk of it is Indonesia?
Yeah, so our own properties are Indonesia, and the 2 hotels in Indonesia, and Mauritius is a joint venture. And also on the consolidated accounts, you'll see the share of profits coming in from our other hotels such as Marrakesh and Salashish.
Sure. That's all from my side. Thanks a lot, sir.
Thank you.
Thanks, Rajiv.
We once again try to take Sumant Kumar. Sumant, please go ahead.
Yeah, thank you so much. Hi, Kalol.
Hi, Suman.
Hi, Vikram.
Hi, Sumant. How are you?
I'm good, sir.
I'm glad.
Yeah. So my question is regarding a corporate rate hike. Currently, we have taken, and also the demand side of corporate. We have seen a good improvement in Q3. But how you have seen in the month of say Jan and Feb, and considering some slowdown in the corporate earnings, do you think that the current mix of corporate in total booking is going to sustain? And also the direct booking, we have seen a significantly improved in this quarter. So do you think this mix is going to sustain going forward?
Can we talk about future? Is it okay? Or
Not really.
Not really.
So Sumant, as you know, we don't give guidances, but you can give, I mean, if there are trends that we wish to discuss, that certainly.
Yeah. So I'm not sure, Sumant, how to answer your question. I mean, the first point I'd like to just mention is that some of corporate business, as occupancies fill up, does trickle into direct. And corporate demand is strong. At least I'm not aware of any event that is causing that to change. So I don't know if I have given you enough information to answer your question.
Okay, so any price, can you talk about the price increase in the recent month we have taken for a corporate side, or negotiation, what we have done?
And again, can we talk about price increases?
Yeah, so the ones that we have done, Sumant, is roughly between, we've mentioned this before, it's roughly between 10 to 15% that have already been contracted, but there are quite a few contracts yet to happen.
And the industry is talking about dynamic price for negotiation going forward. Few hoteliers has indicated they are going for dynamic price negotiation. So can you talk about your side, how you think it is going to work out going forward?
So Sumant, if you heard Mr. Vikram Oberoi, he already mentioned earlier on that the contracting happens for corporates only for the base category rooms. So the balance part of the demand obviously comes automatically under the dynamic pricing, because if corporates want to travel, or if somebody wants to travel and the base category of rooms is not available at the contracted rate, then the next obvious thing to do is to book at the next higher category at the bar rate, which is available on different channels.
Okay.
So even if it's not consciously done, it will automatically happen.
And then lastly, can you talk about the mix of the in the corporate side, the larger corporate and mid-level, and the smaller level, the new upcoming new industry is going to contribute more to hotel side, because the larger corporate contribution to the hotel industry is going to reduce. The new age technology is going to contribute more. So your price negotiation is higher side.
Sumant, I don't know if it would be right for me to talk about which sectors we're looking at, and because that would be information that we'd like to keep to ourselves on where our focus is just strategically for our corporate clients and across segments. So I hope you understand that.
Okay, thank you so much, sir.
My pleasure. Thank you so much.
Thank you, Suman. We'll take the next question from Swanik Patwa. Swanik, please go ahead.
Yeah, I'm audible?
Yes, Swanik, please go ahead.
Actually, it is Saurav. I don't know why it's showing Swanik, but anyway, okay. I'll just.
My apologies. Saurav, please go ahead.
Yeah. So, so while you have highlighted your bullishness on industry and how you outlook in your previous comments, but when we see the hotels which you have announced and which are under construction or at the planning stage, what we see that in India, what we are right now working on is largely something we may have been working pre-COVID also, say like Goa, because that was something which was there, or say maybe Bandhavgarh, and what others are in Nepal or Middle East. So I just wanted your thoughts on what we seem to miss here is like any hotel in upcoming luxury locations, say like Andaman or Lakshadweep, given our success in Bali, or maybe something in Northeast. So we would get to just share some thoughts over here. And why I'm asking this is because this question become more pertinent for EIH, given our strong balance sheet and brand, which actually suits many of these locations.
Yeah.
If you could share some thoughts here.
Saurabh, I really don't have much to say other than what I've already said, is that this is an area where there is considerable focus, and anything that you focus on and apply your attention to yields results, and we'll let the results speak for themselves in time to come. So that's really all I have to say for the moment. As soon as we're able to share that information, we absolutely will.
Thanks a lot.
My pleasure. Thank you.
Thank you, Saurabh. We take the next question from KK, Mr. Krishna Kumar Srinivasan. KK, please go ahead.
Yeah. Hi, good afternoon, and congrats on a great set of numbers over the year and the third quarter particularly. Sir, just want to take your perspective on this G20 meetings that happen in India over the next 12-24 months. How is our hotel placed vis-a-vis the other large competitor to have a presence in this business, and what kind of market shares we had in the events that we had in the last 2-3 months? If you could share some trends, your expectations on this impact of G20.
Could I request, it's a very specific question, if I could request that we take that offline, and we'll be happy to have a dialogue on that with you.
Okay, fine, sir. Thank you very much.
Thank you so much.
KK, I'll coordinate a one-on-one call with
sure.
Salon, and we can take it offline.
Thank you.
Thanks, KK. We'll take the next question from Jinesh Joshi. Jinesh, please go ahead.
Am I audible now?
Yes, Jinesh, please go ahead.
Hello, Jinesh.
Yeah, hi, sir. Thanks for the opportunity. Yeah, my question is on foreign travel. Although this was addressed before, but I just want to kind of take it forward. In response to the foreign travel recovery, you mentioned that the US has seen a full recovery, but in UK, because of some visa issues, the recovery is still not back, and e-visas are now available. So is there any other roadblock apart from this? That is question one. And secondly, if I break down the foreign travel recovery in business and leisure, where are we currently vis-a-vis pre-COVID levels, and how long will it take for the foreign travel to be back to the pre-pandemic levels? So yeah, this is my first question.
So, Jinesh, I'm just trying to remember all your questions. Sorry. Your first question was on the UK, and I'm not sure. First of all, my assumption is visas played an issue. What I can say with absolute certainty is that we saw a sharp decline from pre-COVID levels from the UK. What I'm assuming is that may have been a result of the difficulty to get visas. The other point I mentioned is that the UK economy is going through troubled waters, and you can see this vis-a-vis its growth compared to other European or EU countries. Now, whether that's playing a role or not, I don't know, in suppressing travel to countries like India, whether it's for work or for leisure. But I think the UK will continue to face economic concerns, is at least my understanding based on what I read. So that's as far as the UK goes. In terms of recovery, business versus leisure, I don't have that information present with me right now, and I don't want to make a statement which is in any way incorrect. Your third question was, where do you see a recovery in foreign travel to pre-COVID levels? And my response to that will be, I don't see any reason why it will not recover. I think we need to look at two things. One is not only the percentage, but also the actual numbers. So if the total volume of business goes up and the growth of foreign business is disproportionately lower, obviously the percentage comes down. So I think we need to look at both actuals and percentages to really understand what is happening with foreign travel. But at least from my point of view, and this is personal to me, I believe foreign travel will continue to recover, and we'll see an upward trend in room nights generated from foreign travel in time to come. That's my personal point of view.
Sure, sir. Would you like to put a timeline to this as to when the recovery will be fully back? That is the only last question which I have.
And it's okay to say that, yeah. And I'm not saying this for EIH, but I would say that by typically demand from overseas visitors is strongest in the October to March period. And I would expect that to be the case this coming October, leading on to March as well. So that's how at least I see it.
Sure, sir. Thank you so much.
Thank you very much.
Thanks, Dinesh. The next question is from Rajiv Gala. Rajiv, before we take a question, request the participants to keep their questions short and limit themselves to 2 questions, as you're just running out of time. Thanks. Rajiv, go ahead, please. Rajiv, please unmute yourself and go ahead.
Audible?
Yes, Rajiv, you're audible now.
Compared to other players, Q4 is usually stronger for EIH. Is it because of foreign tourists? Hello?
Yeah. Is that the question, Rajiv? Is it because of foreign tourists?
Yeah, you have got it right.
Sure, Rajiv. Rajiv, I'm not sure what the numbers are for others, so I can't comment on whether we're stronger or they're stronger as far as foreign travel goes. I know what our numbers are, and Kalo shared those percentages with you on the presentation. That would be my first response. But really, going beyond that, it's really a function of demand and supply. And we've seen strong demand for our hotels across locations. And as a result of that, we've been able to drive price. So that's what's led to the results for Q3 that you've seen.
Thank you. That answers
my pleasure, Rajiv. Thank you so much.
Thanks, Rajiv. Victor, we have a couple of questions on the Q&A board. If you permit, may I take them?
Sure.
Manoj Shroff, how has the foreign room nights increasing in Q4 versus Q3? Hence, is it fair to assume better Q4 RevPAR versus Q3? And can we maintain cost structure of Q3?
Well, cost structures are uniform. So whatever had to be factored in has been factored in, but we won't like to make a forward-looking statement on Q4 foreign arrivals.
Another one is from Bhaktawar Lari. What, according to your assessment, is the ballpark expense in % of incorporating green practices in operations apart from green structures at EIH?
Maybe
that's a complicated question to answer.
Too many questions in one question.
Maybe just take the solar. You shared that our prices have come down per unit from 9 to 5 or 10 to 5.
10.9 to 5.9. But really speaking, the initiatives are being planned out as we speak. And we have a whole year in front of us. You'll find a lot of that being reported in the BRSR, which becomes mandatory from April. So I think to answer that in a short call will be really very difficult.
We have a follow-up question from Tarang Agarwal from Old Bridge. Tarang, please go ahead.
Hi, thanks again. Couple of follow-ups. One, if I go through slide 13 of the presentation, which talks about occupancy and ARR performance, this is only for the domestic business, right? This is not for the international business, correct?
Yes, this is domestic, but includes our managed hotels as well.
Okay, got it. The second is, if I look at the leisure villas, the occupancy is lower versus its peer set. So is it because it's more indexed to foreign travel than other class of hotels?
It's not. Yeah, the occupancy is up from 58% in Q3 of FY20 to 62% in Q3 FY23.
Correct, but it's still low, significantly lower than a metro or a Trident Metro or a Trident Leisure, right?
Okay, so
is it because you get a lot more foreign traveler visiting the villas, or is there some other reason to it?
So this, I think when you look at data for a number of hotels, it may not give you a true picture. So this includes the Oberoi Amarvilas, which is just over 100 keys. So it's the largest of Oberoi leisure hotels. And Agra is a destination which has a very, very high occupancy of foreign travel. And Kallol in his presentation mentioned Agra as one location where there was a decline in RevPAR, if I remember correctly, it's about 7%. Amarvilas is extremely dependent on foreign travel. In pre-COVID, this would be, if my memory serves me correctly, at well over 80% of total arrivals at the hotel. So I wouldn't just look at that figure in isolation. I think you need to look at it and factor in Amarvilas, which is very dependent on foreign travel. Sadly, I think I wish more of us went to places like Agra. We would benefit from that, but it's not a destination of choice for people from India, Agra.
Okay.
Despite very good connectivity with a very good road from Delhi now.
Okay, thanks.
My pleasure.
Thanks, Saran. We have time just enough to take the last question. It's from the line of Hari. Hari, please go ahead.
Yes, sir. Good afternoon, sir. Like two questions. Like, does the management see any gaps to be fulfilled both in the domestic and international luxury leisure circuits? Can you please throw some light, sir?
I mean, I think for Benares is a great leisure destination. And today we don't have a hotel present in Benares. But I think I think our country has so many great locations and unspoiled locations that would be very, very appealing to leisure travelers, both domestic and international. In terms of Oberoi hotels and Trident hotels, they're also locations where we should be present, and we're working on those as well. And these are city locations. So I think there's a lot of work to be done both in city and in leisure locations, both for Oberoi and Trident. And rather than and we view that as an opportunity going forward.
Thank you, sir. And the last question is regarding this Mandarin Oriental Alliance.
Yes.
Like, how is it contributing to us, sir? Any quantifiable benefits we are getting from the alliance, sir?
Actually, there's a lot happening in terms of exchange of ideas, best practices, food promotions, etc. It's very hard to exactly quantify the number of room nights because guests pick various channels to book. And they may be Mandarin Oriental guests or Oberoi guests who go and stay at Mandarin Oriental, but they may not come through the by referring it to Mandarin Oriental. And even if you go to our website, what it does is it brings you back to the Oberoi website. And if you make a reservation, through that, you're actually coming through the Oberoi system. You're not going to Mandarin and making a reservation at Mandarin. But I think if I were to answer that question another way, Mandarin Hotels has a presence in key locations in Europe and North America, in locations that are important from an Oberoi guest perspective, and the exposure that Oberoi gets as a result of this alliance will help drive business to our hotels. They may book through various channels, and if this is leisure business, because of the complexities of India, you go to multiple destinations. You need domestic airline flights, you need guides. So it's much easier for somebody to go, or a guest to go to their travel agent who can book everything for them, rather than them coming directly to multiple hotels in multiple locations, plus ground transfers, plus air transfers. So that's just the nature of business when you're going to a country where you're visiting many locations. Average length of a visit is approximately 10 days for international travel. Actually, from the US, it's slightly longer. From the UK, it's 10 days for leisure, and with multiple locations.
Thank you very much.
My pleasure.
Thank you very much. That was the last question. And before I hand over the call back to Vikram, I'd like to congratulate Vikram, Kalol, and their team on once again being awarded the best brand. Over to you, Vikram.
Thank you so much. And Naveen, actually, it's, I really genuinely say this, that credit doesn't come to me. Credit goes to all our colleagues who, look after our guests every day when they come to our hotel, who follow the values of our organization that are articulated in our dharma. They're really the true heroes. Our job is to give them the support they need and help them to flourish. So if anybody deserves credit, they do, more than any one of us at corporate office. They are true heroes. And we thank them for doing this day in and day out with our guests, and also supporting each other. It's very important that we have people who enjoy what they do. If you enjoy what you do it well. So the culture we try and create within the organization and at our hotels is one where we hope people really enjoy what they're doing and therefore make a meaningful difference.
Thank you very much, Vikram. Kalol, you wanted to add something?
No, I just wanted to add that finally, it's the questions that we used to hear in the earlier analyst calls of whether rates are going to go up. So we hope we've been able to answer some of those this time, and obviously going forward. And as I said that this is only green shoots, because if you look at the number of tourist arrivals into India, that is far less than other countries. So there's a lot of potential there. The rates that is currently that prevails in India is way less than what it is in other countries. So we do have reason for optimism to believe that India as a country should move much ahead in the times to come. Thank you.
And maybe I'll just add one more thing to what Kalol said, is hotels in India are actually relative to whether it's the developing world, whether it's the Middle East, whether it's Europe, are significantly cheaper. To get a quality of hotel that you get in India in the luxury segment is at a fraction of the cost of what it would be elsewhere. And if you go to a city like London or New York, and I'm not saying we're at London and New York, and you stay at a leading luxury hotel there, you'll be paying upwards of, in New York, upwards of $1,200 to $1,400 a night. And in London, you'll be paying upwards of £1,200 to £1,400 a night. So we are really, really good value. And I hope all of us, whether it's us or it's our competitors, give our guests an incredible experience that is hard to replicate in other markets. So I think there's significant upside on ARR, and I hope we all benefit from that.
Thank you very much, Vikram. It's always a pleasure hosting you and Kalol, and we look forward to hosting you for your future interactions with investors and institutions. Thank you very much, ladies and gentlemen, and have a lovely day.
Thank you so much. Thanks, Naveen.
Bye-bye.
Thanks, Naresh. Bye-bye.
My pleasure. Bye-bye.
Thank you.